Okay, let's unpack this. It feels like everywhere you look, especially in really fast-moving fields, you almost need a PhD just to follow along, right?
Yeah, the complexity can be overwhelming.
But what if there were, like, shortcuts, ways to really get a strategy, figure out what makes it tick, and why it might actually matter to you?
That's a great question. Finding clarity in the noise.
And that's exactly what this deep dive is for you. Today, we're zeroing in on one specific strategy that gets talked about a lot, one that promises these accurate buy-sell signals in trading, super fast-paced stuff.
Right. That lays out this combination. It uses two particular indicators on TradingView.
Okay.
And it's really geared towards scalping and day trading specifically,
Yeah.
short-term moves.
Gotcha. So our mission today is pretty clear then. By the end of this, you'll understand the nuts and bolts of this strategy, the actual tools you'd use, and, importantly, the things you really need to think about before even considering it.
Exactly. The goal is to help you see how someone might use this method to, as the source puts it, spot highly reliable entries.
All right, let's dive in. So the core idea is combining two indicators. You mentioned it's for short-term trading. Scalping, day trading. How short are we talking?
Oh, really short. Frames like 1 minute, 5 minute, maybe 15-minute charts. Very quick, in and out.
Wow, okay.
Yeah, and the video we looked at actually used a 1-minute chart for its examples. So yeah, definitely focused on speed.
And here's where it gets really interesting, I think. Get into the tools. What's the first indicator?
The first one is called Range Filter Buy and Sell. The creator listed is PVNTOM.
Range filter buy and sell. Got it. And setting it up. Anything tricky?
Mostly default settings are fine. But the crucial step, according to the source, is customizing the style. You basically go in and uncheck everything except the main buy signal and sell signal options.
Why do that?
Just to keep the chart clean. You want to focus only on those specific signals from this indicator, remove all the other visual noise, makes it much easier to read quickly.
Okay, clean and focused. I like that. What's the second indicator then?
The second one is the Fromo Channel, created by someone called Big Beluga.
Okay. Default settings again?
Yeah, defaults are generally okay for the main settings, but there's a specific visual tweak you need to make.
Oh, what's that?
You have to go into the options for the indicator on the chart, usually clicking the 3 dots, find Visual Order, and select Bring to Front.
Bring to front. Why does that matter?
Because the Fromo Channel does something really neat with candle colors. Bringing it to the front ensures your actual price candles get colored based on where they are relative to this channel and its momentum reading.
Ah, I see. So the channel itself colors the price bars.
Exactly. And what's fascinating here is how it colors them. It gives you this instant read on market momentum.
How so? What do the colors mean?
Well, gray candles mean low momentum. The market's likely flat or choppy. Green candles signal rising momentum, suggesting an uptrend.
And blue.
Blue candles mean falling momentum, indicating a downtrend. It's incredibly powerful, just at a glance.
That does sound useful. Any other signals from this Fromo channel?
Yes, it also provides its own buy and sell labels. These apparently pop up when momentum shifts direction after one of those flat gray candle periods. These labels are essential for confirming trends.
Okay, so we have the range filter giving buy-sell signals and the Fromo channel coloring candles and giving its own buy-sell labels. How do you actually use them together for a trade?
Right, this is the core logic. You need confirmation. The rule is you're looking for 2 signals, one from each indicator, but they have to appear within 2 consecutive candles.
Only 2 consecutive candles, so not at the same time.
To ignore signals if both indicators fire on the very same candle.
Okay.
And you also ignore them if the second signal comes, say, 3 or 4 candles later. The confirmation has to be immediate on the very next candle.
So signal 1 on candle A, signal 2 must be on candle B.
Exactly. That sequence signal, then immediate confirmation on the next candle is what makes it a valid trade setup according to this strategy. Anything else, you just pass. It's about discipline.
Okay, let's walk through an example maybe. A buy trade.
Sure. So imagine you see a buy signal pop up from the range filter indicator.
Right.
Then on the very next candle, 2 things need to happen. The candle needs to be colored green by the Fromo channel, and the Fromo channel needs to display its buy label.
Okay, range filter buy, the next candle is green and has a Fromo buy label. Check.
Once you have that confirmation, the rule is to enter a long position right at the open of the next candle after the confirmation.
Got it. And stop loss, profit target.
Stop loss goes below the middle line of the Fromo channel, and the profit target is set at 1.5 times whatever your risk is. So a 1 to 1.5 risk-reward ratio.
Okay, that seems pretty clear. In a sell trade, I assume it's just the mirror image.
Pretty much, yeah. You might see, say, the Fromo channel give a sell signal first, maybe after some gray candles.
Right, indicating a shift to downside momentum.
Exactly. Then on the very next candle, the range filter indicator gives its sell signal. That's your confirmation.
So Fromo sell, then range filter sell on the next candle.
Correct. Then you'd enter short, put the stop loss above the Fromo channel's midline, and again, aim for 1.5 times your risk as the profit target. It's all about waiting for that specific sequence.
This all sounds very structured, very rule-based, but, well, this raises an important question, doesn't it? No trading strategy works 100% of the time.
Absolutely not. And that's a critical point the source material does acknowledge, thankfully.
Yeah.
It's not a magic bullet.
Right. So the source mentions sometimes signals appear at the same time, and we skip those, like you said.
Yep, skip them.
But it also says there will be false signals or trades that just don't work out and hit your stop loss.
Yes, inevitably. You'll get setups that look perfect according to the rules. You take the trade, and it just goes against you. That's part of trading.
So if we connect this to the bigger picture, how do you handle those losses without blowing up your account?
This is where risk management becomes absolutely essential. The Force strongly emphasizes the 1% rule.
The 1% rule. Can you explain that?
Sure, it's a classic rule. It just means you should never risk more than 1% of your total trading capital on any single trade.
Okay, only 1% per trade.
Exactly. So if you have, say, a $10,000 account, you wouldn't risk more than $100 on one trade, regardless of how good the setup looks.
And the benefit of that?
The benefit is survival, really.
Yeah.
It allows the strategy to work over time. Even if you hit a string of losses, which will happen, risking only 1% means you protect your capital. You can absorb those losses and stay in the game long enough for the profitable trades to hopefully outweigh them.
Makes sense. It keeps you from catastrophic losses on just one or two bad trades.
Precisely.
So wrapping this up, what does this all mean for you, the listener? Well, we've just unpacked what seems like a fairly simple but potentially powerful dual indicator strategy.
Yeah, specifically for scalping and day trading on TradingView, using that range filter and Fromo channel combo.
It's all about simplifying the chart, looking for those very specific two-candle confirmations, and then executing.
But, and this is the big takeaway I think, while the tools and the entry signals are interesting, they're only part of the story. Understanding the nuances, the limitations.
Like the need for high volume and liquidity.
Exactly. And especially understanding and rigorously applying risk management, like that 1% rule, that seems paramount. It's not just about finding trades, it's about managing the risk involved.
Definitely. The discipline seems just as important as the indicators themselves. So here's something to maybe chew on after listening to this. Think about this heavy emphasis on immediate confirmed signals, that two-candle rule, and the strict risk management. How does that reflect maybe a broader modern approach to dealing with volatile markets? Prioritizing clear rules and discipline over just gut feeling or intuition.
That's a great point. It's very systematic.
And maybe stepping back even further, what could that teach you about making quick, calculated decisions in other parts of your life, other situations where you're flooded with information and need to act decisively, but also manage potential downsides, something to ponder.